Alrighty guys, now we know how to look at trends, now we know a little bit about candlesticks. Next thing we're going to talk about in technical analysis, the most basic, but also the most important form of technical analysis, which is support and resistance lines. So, as we're going to be looking at Apple, we're going to be using this as our example for today. As we can see, it's an uptrend, moving from the bottom left to the top right of our screen, which for you is going to be like this way. But we can find areas in which it bounces from, which are basically what support and resistance are. Support is an area or a line in which a stock falls to, then bounces off of and goes up. Resistance is a line in which the stock rises, hits off of, and falls. So you kind of relate it to a relationship, you know. If you got a good partner, they'll pick you up at your low points, which is support. And if she's from the streets, you know, she's gonna reject you and leave you for someone who has a bigger wallet and a bigger schlong. If the asset that you're looking at happens to break through these levels, whether it be support or resistance, it then becomes the opposite. So let's say for a while it's been bouncing off this certain level that it's been at. Well, let's say one day it happens to break through. The next time it comes to this level, it has been support or resistance. And if something breaks through a resistance, the next time it comes down to hit this level, it's going to become support. So like I said, let's go ahead and look at Apple, for example. Your boy finally got an Apple iPhone. Where the hoes at? We're looking at Apple. Let's go ahead and look at some different support and resistance levels. So for me, I'd probably mark off this level right here. Ooh, I forgot I have a different color. Let's go and make it white since it's easier to see off of this incognito mode. It's not really incognito. I'll go ahead and mark off this level right here. Boom. Pipe right there. Boom. Right, and about right there. Alright, the most important one we're going to be looking at is this one right here, and I actually changed the color so it'll be a little bit more easier to see, make it a little bit more thicker. Well, like I'm thick. But as you can see, this level has been resistance in the past. You know, whenever it was earlier on, like in 2020, you know, it came up to this level, bounced off. I'm going to actually highlight this with a highlighter. So right here it hit, right here it hit, right here it broke through, but eventually it fell back down. It hit again right there, it hit again right there, and then right here it finally broke. And like I mentioned before, when it finally comes back to this level, it now becomes support. So this 138 is a pretty strong support level now, since the price is above this level for Apple. Why? Because in a big span of time, it's hit this level multiple times, and the more hits and touches that a support line or area has, the more valid it is and the more stronger it is. Not only that, but if it has the ability to change the trend of a stock, it's definitely what's called a strong support line. So right here, it's been in an uptrend, bounces off of. Not only does it just go down like how it did right here, it came down and changed the direction of it. Again, uptrend, hit this line, became a downtrend. Right here, I kind of argue that it's not necessarily in a downtrend. But right here, let's see, it's been an uptrend, it comes down into a downtrend, bounces off of. Let me go ahead and get out of this and go to my cursor. And since then, it's been really in an uptrend. So again, 138 is a pretty damn strong level for Apple, and if you were to ever see it at 138 again, it'll probably serve as a good support, just depending on what's going on in the world. Because as I mentioned in the previous couple videos, stuff going on in the world, news, it trumps all technical analysis. It doesn't matter how good you are at looking at charts or drawing these little fancy lines. If there's bad news about a company, about the president, about war, it doesn't matter. And also just keep in mind, you can keep it super simple. You know, you don't have to draw all these lines. You can kind of just, you know, keep it simple. Have just a few lines, or you can get as complicated with it as you want. Just remember, the more touches it has, the more valid it is. And also, it doesn't have to be perfect either. You know, consider trading and charting like an art, not like a science. That's what I've been told before, and it actually is very true. You know, these levels don't have to be perfect, but just as long as you're able to encapsulate these moves, these times where these levels of which it bounces off of, so that way in the future, if you were to see it's in a certain trend, you see these certain candlesticks, and you see the support lines, it strengthens your argument to say that, hey, I know which way it's going to go, basically. And we're going to keep adding on to this. We're going to go into the next type of technical analysis, which is going to be trends and channels.